Hey everyone, welcome back. Hope you guys are having a great Thursday, and thank you so much for coming in to watch this. But today we're going to talk about obviously the first report that we have for Q4 numbers, which is from Cleanspark. We're going to start getting a lot more financial results here for all the miners. They're going to be, I think a lot of them are going to be the fiscal year end results, so it might take a little bit longer. But the ones that don't end on exactly December, they'll be coming out a little bit faster than the ones that do end, because they have to be audited. Okay, so we have Cleanspark to go over. We also have Cypher 3D to go over their production update for January, and then also Stronghold as well. And then we'll pretty much call it a day. So it should be pretty quick. Hopefully, we'll get through this relatively quick. But nonetheless, you guys know the drill here. Not financial advice, for entertainment only. Please do your own research. I'm investing in following coins and companies for full disclosure. And if you enjoy this type of content, hit the like button. It helps me out tremendously. And then also subscribe, hit the notification bell. That also helps out as well. Especially if you enjoy this type of content where I do a pretty much deep dive on the miners every day here. But that is beyond the point here. Let's get into what's going on here with the markets here really quick. And we can see that Bitcoin had a nice day today. Miners had a fantastic day today as well. Bitcoin obviously went above our 45,000 resistance line here today, and it closed above it, which is nice to see. So it was actually up today 2.16%. It closed at 45,321 cents. We are now up to, well, we're at 45,449. We're bouncing right around there someplace. We're still up 0.32% on the day, on the new day. So that's looking pretty good here for Friday coming up. Now, as far as the miners were concerned, we had pretty much all miners in double digits gains today, except for a couple. So we'll just go through this really quick here. Annie was up 10%. Argo, for whatever reason, was up 20%. BitDigital was up 12%. BitDeer was up 16%. Bitfarms was up 10%. Cypher up 15%. Cleanspark up 12%. Cleanspark obviously reported their numbers for Q4 today. They were up in the after hours like 20%, but they kind of fell back down to about 14%. So it's going to be a nice run tomorrow, possibly. Cores was down, well, not down compared to the other miners, but it was up 4.96%, was 5%. DigiHost was up 12%. DMG up 10%. Hive was only up 9.97%, almost 10% here on the day. Hut 8 was up 10%. Iris Energy, 23%. So that's great there. Marathon, 23%. Mawson up only 9.47%. Then we got Ride up 15.2%. Stronghold up 14.9%, almost 15%. Wolf up 18%. A really good day for the miners. And then we can see here some of the ETFs here that we do have for the miners. WGMI was up 15%. BitQ up 9.2%. DAP was up 10%. And BKCH was up 11%. So overall, pretty good day. We'll see how this continues going forward into tomorrow, and then we'll see how Bitcoin does over the weekend. Miners obviously don't trade on the weekends, so we won't get into it. But let's get into the first story that we do have here, which is going to be on Cleanspark. We'll leave that for last. A little bit of, what do they call that in the business? A cliffhanger, I guess you could say. Okay, first one we're going to do here is Sphere 3D, provides January 2024 production and operation update. And here's what we have from them. Key highlights. 61 BTC mined in January. That's an increase 91% year over year. Month-end operating hash rate was 1.2 exahash. So that's down from December due to machine transfers. So they're getting those machines out from core facility, I think. I think that's what they said. Uptime was 82%. And then here's what we have. BTC mined, we covered that. BTC sold. So they actually sold 76.4, more than what they mined here. And then Bitcoin holdings was 25.8 BTC as of the end of January here. Let me see if there's anything else that I wanted to cover here. Okay. Halvening event. So Sphere 3D has anticipated the halvening and is preparing accordingly. Sphere 3D is focusing on various alternatives and considering a number of options for growth, including but not limited to adding exahash organically, mergers and acquisitions, and other options. Sphere 3D is currently focused on strategic opportunities and on maintaining operational efficiency. They are definitely looking for mergers and acquisitions, potentially somebody to merge with, somebody to buy them out. And I'll show you guys the numbers here that we do have for them. They don't look too good. But we'll go through it. They might be able to survive a little bit much longer, but we'll see how that's going to play out. So let's take a look at the numbers I do have here for them. I did update the stock prices on all of these miners today. So we have the latest data on here, and right now we have shares outstanding was 14.3 million shares. Stock price 238. That gives us a market cap of 34 million. Right, very small micro cap, basically miner here that we are tracking. And going forward, I may have to cut the line at, if the miners are not going to become post-halving like at 5x or something like that, I may have to cut them off because they're really not growing beyond that. But we'll see. I'll do some polls with you guys on Twitter and in Patreon as well, and see what you guys think if I should get rid of some of the smaller ones, because I don't know if they're going to be able to survive another halving event. All right, but going back to Sphere 3D here. Performance over the last 12 weeks has been pretty good, and we've seen some of these smaller micro cap miners do really well in the last well, probably in the last couple of months, year even. We've seen it with Moss, and we've seen it with obviously Sphere. We've seen it with some other ones as well. And that could be just people looking to get in on the smaller miners that might have less shares, right? 14 million shares. That's much easier to manipulate than it is on somebody that's got 200 million shares out, right? You're going to be able to drive the price up much faster. So I think there might be some manipulation in the market here with some of these smaller guys. Okay, current hash rate 1.2 exahash, future hash rate 1.8 exahash. They were at 1.3, I think, just last month. But we'll look at the numbers here. And then we can see that their HODL is 25.8. That's valued about 1.1 million right now. BTC production over the last basically 13 months. You can see that they peaked in May, which a lot of miners peaked in May. They also increased their hash rate in May. That kind of helped them out. But then they've been kind of going down. And then as Bitcoin transaction fees have increased, so has their production here. And then they're down to 61 again, which is still above their average, which is still kind of good there. Okay, month-over-month difference for hash rate, BTC HODL. You can see that's been kind of all over the place. Their lowest was in August. Their best was obviously in December, and then they're down to 26 here again. BTC per exahash efficiency also been kind of all over the place here, down to 15.8 right now. BTC sold average is 63. They sold 76, so they sold more than their average is right now. And you can see their hash rate here. So in May, like I said, they increased their hash rate from 433 petahash to 1 exahash. That helped drive the BTC production there, along with the Bitcoin transaction fees on that. Then they had a nice little increase here in July, and then again in August, and they were pretty much flat throughout that, and then back down in December, in January. Okay, BTC mined revenue. Revenue has been increasing here as the Bitcoin price has been going up, and transaction fees have been going up as well. But it's back down a little bit here. We saw a decrease in transaction fees, plus they mined less. Their uptime was worse this time around. BTC sold value, this is how much they've been selling here throughout. They're kind of averaging right around probably close to 2 million, I'm guessing, here per month that they're selling, trying to stay afloat there. Last 4 quarters revenue. So that has been growing, which is nice to see. Last 4 quarter operating costs minus depreciation. Those have also been pretty high here. So they've been basically losing money on it. Cost to mine 1 BTC minus depreciation. That was pretty high in Q3 of 23. See where they come in Q4, if that's gone down or if it's actually gone up. But that's definitely very high here for them. Bitcoin mined quarterly, that has been increasing here, a little bit less so in the last 2 quarters, or last quarter actually from the other quarter. And then debt to equity ratio lower is better. They're at 0.35. Current ratio higher is better. They're at 0.78. And you can tell that by the total current assets, 5.2 million compared to total liabilities at 6.7 million, you could say. So more debt right now, or liabilities, than they do have in assets to pay for those things. So that's obviously a troubling sign there. All right, looking at the numbers here for what they mined in January, it looks like they were mining for about 26 days roughly, from what I could figure. And I added 261,000 in Bitcoin transaction fees revenue into it there. And I also took out some miners here as well. The ones, I don't know when those got moved out, but they basically took out 100 petahash here for the month of January. So that's kind of the way it is. But if they were operating at 80%, that's pretty close to that. So I think that kind of makes sense there. All right, going up over here, we're currently looking at institutions and analysts ratings. We have them right now at pretty much the same numbers here. 18 institutions. Shares did go down a little bit to 119,000 from 125. Percentage owned went down a little bit to 0.83% from 0.87%. But we still have the same buy ratings. So 1 buy rating, right? Nothing else. Then we still have the same price targets of $5 and basically across the board there. So that's how that stacks up. And let me see if I updated this here. I did update it for February. Okay. So looking forward the next 12 months, 2 months before the halving event at 100%, then the 10 months after the halving event at 50%, we're looking at potentially being at $3.19 to $4.79. It's kind of the way I see it. PE of 5 or PS of 5, however you want to look at that, because they don't have a lot of growth. They're kind of way down on that number there. We'll have to see how they do. But looking at the last, I want to make sure I'm using the current quarter of December. Okay. So this includes the numbers for the current quarter that we're in, plus the last 3 quarters prior to that. So Q3 still or Q4 still in the estimate because they haven't reported yet. And then we got Q3 and Q2 that go into it as well. And at that point, having between $4.52 to $6.78, they're currently at $2.38. I think they are undervalued based on this, but there's reasons why. And the reasons are not a lot of growth left, high cost of Bitcoin mining. We can also take a look at, we'll look at their financials when they report the Q4 numbers, and then we can do a better deep dive on it. But that's kind of what we're looking at. Sphere 3D is one of the ones that I'm thinking is going to get either bought out by somebody. But with them, it's the same thing. They host pretty much everything. So the only thing you're really buying there is assets with them, or not assets, with miners. They don't have much assets as far as infrastructure. So there's really nothing there to buy based on that. So it might be tough for them. But we'll take a look at them when they report Q4 numbers. We'll get some updated numbers for them, and then we'll run through it as well with everybody else here. Okay, so that's Sphere 3D right now. Let's take a look at Stronghold here. So Stronghold announces January Bitcoin mining and carbon capture update. I like Stronghold, what they're doing with all the spent ash and how they're using that to reclaiming the facilities, not the facilities, but the sites that have been basically allocated for the spent ash. And they're doing a lot of great things. It's just their operations are pretty miserable. So we'll get into this here really quick. And here's what the update is. It's pretty short. It's they mined 182 Bitcoin in January and generated about 400,000 in energy revenue. So not much there as far as that is concerned. And then the carbon capture update, it looks like they are making some progress there, which I think might help offset some of the operational costs that they have. Potentially, we'll have to see the numbers on it again. But we'll take a look at the numbers that we do have here for them on January numbers. So Stronghold here, and this is what I mean by as far as operational costs, right? In Q3, they reported, let me see here, just on those three things, which is fuel, operating and maintenance, and general administrative costs, that equals 22 million in expenses, while their revenue, total operating revenue was 17 million. So that was energy, cryptocurrency hosting, cryptocurrency mining, and then other as well in there. So definitely spending a lot more on the operational costs of things than they are in revenues. That's not a good sign. Okay, but like I said, I like what they're doing. I wish they would do much better as far as the operational costs go. Not that one. Let's go back up here. So Stronghold has 7.9 million shares outstanding, is what I could figure out. Stock price is $5.30. That's 42 million market cap. So pretty similar to Sphere, right? But the only thing is Stronghold actually has some assets. They have the power plants that they're running out of. They're also doing the carbon capture, things like that. So I would think they would be valued more than Sphere, but there's reasons for it. Like I said, the debt is one thing, and then the operational cost is the other part of it. You can see that they're up, not operations, but their performance over the last 12 weeks has been pretty abysmal. Only 13% up from 12 weeks ago, and then down from 8 weeks, 4 weeks, and 1 week. And you can see those numbers there. Current hash rate is at 4 exahash. Future hash rate is supposed to be about 4.7 exahash. Based on numbers that I do have for them, they do have a HODL 50, but they didn't report any updates to that this time around. So I don't know if they still have a 50 on that or not. I'm just leaving it in there because they didn't provide anything. BTC production here, you can see, has been kind of up and down, but kind of averaging right around 190 BTC over the last, 10, 11 months or so. On that one, January was 192 here. Their average is 156, it looks like. Oh, we got a couple of zeros here. That's kind of throwing the numbers off. But that's kind of when they started providing their operational updates again, and that's kind of when we started tracking them again. But you can see they're kind of up and down here a little bit. Month over month difference on that. BTC HODL, they don't HODL anything, it looks like. BTC per exahash efficiency also peaked in June here at 75, and it's been coming back down to 47.95. So that's not optimal. I guess you could say BTC sold. They sell obviously quite a bit there. I would say they sell pretty much everything that they do mine here based on the numbers. Yep. Hash rate, you can see that they were at 3 exahash basically beginning of the year. Then they got to 3.4 and then 4 exahash, and then been kind of flat ever since then. BTC mined here has been kind of up and down as well. You would think that May would have been a really good month for them, but for whatever reason, they didn't do so well compared to some of the other miners here. December obviously was a good month for them with the transaction fees being added in that, and then obviously they're down here a little bit here, surprisingly. So they must have done much better, must have had much better uptime in January than they did in December here, based on those numbers. BTC sold value, sell everything. Last 4 quarters revenue, self-mining only. I'm not looking at the other things, but you can see here, it's been coming down here, and it's going up a little bit here now, the current quarter that we're in. Okay, and this is for Q4 numbers here on that one. Operating costs, self-mining only, right? 15.8 million. If we include the other costs in there for fuel and everything else, it was like 22 million or something like that. So that was not good. Cost to mine one Bitcoin minus depreciation, that's 25,000. That's really high. They really need to get that under control there. Bitcoin mine quarterly has been pretty flat here. You can see about 620, 626, 620 again in Q3. We'll see what Q4 looks like. Q4, we'll take a look at it down there. Q4 looks like it's going to be around, let's see, November, 598. So it's going to be even less than what they mined prior. Total current assets, 12.3 million. Debt, 20, or total current liabilities, 28.2 million, right? That's not good there. And let's go down here to the numbers that we have here. For January, I added 824,000 to them for transaction fees being added into it. And then they were operating for about 24.6 days on average in January, which would have been a slight increase, from December. December, I calculated them at 22.4, with 1.7 million added in transaction fees from Bitcoin on that. So they have operated a little bit better in January, which is nice, but still nowhere near where they probably should be, closer to 30 days or 31 days to really maximize what they can get possibly. Okay, so that's got us to the 8.2 million in revenue, which works right there. And we're using the Bitcoin price, average Bitcoin price for the month of January as well. And then going up here, institutions and analysts, 48. So that's a decrease that we saw from 51. Shares also decreased a little bit here from 580 to 577. And the percentage went down a little bit as well to 5.52 from 5.56. And we still have one strong buy rating, one buy rating, one hold rating, 0 underperform, 0 sells. Price targets, however, ticked up here to $22 for the high, $12.33 for the average, and $7 for the low. So that actually went down on that one. The average went down and the low went down, but the high actually went up. So I'm guessing the analysts are thinking that the carbon capture, once it goes live, that might help offset some of the expenses that they have and make them a little bit maybe more profitable, which wouldn't be bad. But based on what they are right now, the operating expenses, the debt, well, not really the debt, but just the balance sheet right now is not looking too good. Looking forward the next 12 months, 2 months before they're having it 100%, 10 months after they're having it at 50%, having between $18.11 to $27.17. They're at $5.30, right? But there's reasons for it. Balance sheet isn't healthy. Costs are way out of control, it looks like. So there's reasons for this. And then if we look for the last 3 quarters plus the current quarter that we're in, we're looking at $26.08 to $39.13. All right, so if they could fix those things, the balance sheet, fix their uptime, fix their operational costs, I think they would be worth a lot more. But they are where they are right now based on this information that we do have here. Okay, so we'll see how Q4 numbers come in for them, and we'll obviously go through it all. But let me know what you guys think of them down in the comments below. We'll discuss it there. And yeah, we'll leave it at that. Okay, next and last one here is going to be Cleanspark. I did listen into the Cleanspark report. Couple things to note on that one that I remember from the note. I didn't take my notes with me, but they said electricity cost was 4.4 cents per kilowatt hour. It seems like that's what they stated. And then also with them not being able to get to the 16 exahash, the I think it was 1.4 exahash they said that's going to be delayed a little bit. That was based on a transformer that did not pass inspection. For whatever reason, didn't pass inspection. So that's got to get replaced. Once that gets replaced, then they'll be able to get back up to the 16 exahash, which were kind of what we were expecting. But right now it looks like they're going to get to 13.4 or 13.6. I can't remember exactly. It's one of those two numbers within the next couple of weeks. So that's great there. So it's good. At least it's going to be a nice increase there. Okay. That's basically, I'm trying to think if there's anything else that I heard that was kind of interesting. They did ask him why are they going into like Mississippi as well, buying facilities there. And they said basically it's kind of a similar situation where they are in Georgia right now as far as the structure around the electrical grid is there, I guess. So it kind of makes sense for them. If they understand it, they know it, might as well do the same thing. Okay, so actually really good report here. So Cleanspark reports first quarter fiscal year 2024 financial results. And here's what we have. We'll just go through some of the main points here. So revenue grows 165% year over year. Current hash rate surpasses 12.5 exahash. So that's already been installed in the last couple of days, the last 2 days. So that's good there. They have a little bit more to get to the 13.4, 13.6 exahash before they get that other transformer up and running. You guys can read all this stuff here. Just highlights here really quick. The company increases quarterly revenues to 73.8 million, an increase of 46 million or 165% from 27.8 million for the same period, prior year period. Net income for the 3 months ended December 31st was 25.9 million or 14 basic income per share compared to a loss of 29 million or 46-cent loss per share for the same prior year period. Adjusted EBITDA was an increase to 69.1 million, reversing from 2 million or negative 2 million in the same prior year period. Wow, that's a mouthful there. Okay, so all good things here. Majority, I think partially this was offset because of the new GAAP rules. When it comes to reporting on Bitcoin, they can now report a gain on the value of Bitcoin that they hodl. And I think the same is going to be true when the value of Bitcoin actually goes down, that will be reevaluated, I guess, or revalued, and then we'll actually put a loss on it. So with that, I'm actually thinking that some of the miners might actually start doing a little bit more of a hybrid, I think, approach to Bitcoin hodl, where in bull markets, it makes more sense to hodl. And if we have a repeat of the last couple of cycles that we've had where we had a bear market, they might actually start selling more into the bull run in order not to have those revalued assets basically coming down on and affecting their financials potentially. But let me know what you guys think. Okay, let's take a look at the numbers that we do have here for Cleanspark, and we'll call it a day here. Okay, so Cleanspark shares have been updated as of the Q4 or Q1, which is ending in December for them. So they, at that point, no, this is actually at the date of reporting here. So 188 million shares as of the reported date, which is today. So that's today. Okay, based on the stock price at $10.50, obviously the stock price went up another 14% over in after hours. Market cap right now is at $2 billion roughly on them, so that's really good. What else can we take a look at here? The 12 weeks performance has been pretty good. It hasn't been great, but it's been pretty good. 110% from 12 weeks ago. They're down 22% from 8 weeks ago, and then from last week they were up 1.7, and then 1 week ago they were up 3.37%. So that's not too bad. Current hash rate, I have them at 3.6. That's kind of what they're reporting that they're going to get to here in February. So that's kind of what I put the numbers in. Future hash rate, 32 exahash. They still have 18.9 exahash left to install. So a lot of growth still left. And then let's see, we talked about the operational update when they reported about a week ago now, it seems like. So we'll just take a look at some of the numbers here that we have for them as far as the quarterly metrics. So looking at the quarterly metrics here, we can see that the revenue has been increasing quite nicely here, especially in Q1. We had a nice jump in there. And then the current quarter that we're in right now, which is going to be Q2 for them, Q1 for everybody else for the most part, we're looking at 84 million potentially for them to generate based on where Bitcoin is right now, network hash rate, and things like that. That's going to change depending where those two things go, and then how many miners they actually get installed. Okay, so this one's an estimated number. Last 4 quarters, operating costs minus depreciation. Cost actually came down to 50.7 million from 55.9 million, so that was good to see. Definitely like seeing that. Cost to mine 1 Bitcoin minus depreciation came down to 14.3. In Q4, it seems like they put a bunch of crap in there. They made it made it look more expensive to mine Bitcoin than what it probably should have been. Okay, so we're back down to 14.3, which kind of goes in line with kind of what we're expecting, right? A steady rise here in the cost to mine Bitcoin as network hash rate increases. Bitcoin mined quarterly, you can see that as well. 2019 here looks like for the quarter, and so that's a nice increase from Q4. And then we take a look at the debt to equity. Lower is better as always, down to 0.06. That's really good. And then current ratio, higher is better, 4.2. So basically they have enough assets to pay the current liabilities 4 times over, basically, is the way you can look at it. Total current assets, 181 million, nice increase here from Q4. Total current liabilities came down to 42 million, also a nice decrease from Q4 to Q1. So that was good there. And then we won't go through this. We'll get into the numbers here in general here. So as you guys know, I track all of these quarterly reports, and then we can obviously run some numbers, look at some graphs, do all this fun stuff with it. We'll get into my metrics here in a minute. So assets, like we talked, increased. That was good. Total current assets also increased by about 79 million or something like that, roughly. So that was good. Total assets increased by about 100 million to 862 million from 79. So that was good there. Liabilities here decreased to 42, like we said, from 74. Total liabilities decreased also to 52 from 84. So that was good there. Let's see, what else do we have here? Stockholder equity, that increase. So that was good there. And then revenues. Revenues we talked about, obviously. Already 73.7 million compared to the 52.5 million. Nice increase there. Cost of revenues exclusive of depreciation and amortization shown below. So that was 28 million. So that actually came down from the 30 million here. So that was good. Professional fees also came down to 1.5 from 2 million. So that's good. Payroll expenses actually went down a little bit, 15.3 from 15.7, but that's still pretty good that they're trying to be as lean as possible. General administrative expenses went down by 2.7 million. So like I said, they probably put in some bonuses in there as well for general administrative expenses, potentially. Or I don't know what they were doing, maybe flying a lot or something like that, but that definitely came down to where I think it should be. So that was good to see there. Okay. Big thing here is the gain on fair value of Bitcoin. See note 2 and note 5 of the report. On that one, I don't have those notes here, but that is basically the new gap reporting rules on Bitcoin, FASB reporting rules for where they can now, if Bitcoin price goes up in value, they can revalue that asset and put that on here. Excuse me. And I have it as a negative here because they actually subtracted from this, and I just add up all the numbers here. So that's kind of why I'm doing a negative, but it's actually a positive. They gain value on it. Maybe I can, I'll have to figure out how to do this. But all the numbers that they reported, all the numbers match up here. It's just I have to do it as a negative because they actually subtracted instead of adding it. Right? Yeah. Yep, correct. Okay. So that was all good. Cost of revenue was 45 million. That's down from the 121 million here. So like I said, they threw in a bunch of stuff in here in the prior quarter that offset a lot of these things here. Okay. Cost of revenue depreciation was 50 million compared to 55. So that was good there. Gross profit went up to 38%, which was nice to see instead of the negative 130 some odd million that we had here, or negative 131%. And then gross profit minus depreciation was up to 79%. So, right, depreciation is not a cash expense. So 79% is really good there. And that's kind of why we use the 50% of net income and 75% net income, because once the miners start becoming more profitable, it becomes looking a lot better for them right around the 75% mark. Okay, what else do we have here that was kind of interesting that I thought we saw? Let's see, income loss before income tax, 27 million instead of negative 68 million. So that was good. And then net loss was positive 25 million instead of negative 74 million. So that was really good. And then obviously the stock market appreciated that and the market went up. So that was good there. And let's see here. I have it minus depreciation. Okay, so minus depreciation, I can't say that word. Depreciation comprehensive income was 55 million. So that's taking that out. So that basically came out to be about 31 cents per share earnings on that if you take out depreciation out of it. Okay. Now, let's go take a look at some of my metrics here that we do have here. And, okay, first we'll start off with shares, and we'll work our way back up. So shares increased basically from the last time they reported from 184 million to 198. That's only 7% increase in share dilution. That's not too bad. We were thinking it's going to be maybe worse than that, but this is actually really good. General administrative expenses, obviously percentage of revenue was 6.78. If you include general and administrative compensation plus payroll, we're looking at 27%. I'd like to see that below 20% if possible. And then you can see here the debt equity ratio, current ratio, book to value is 810. Price to book ratio is 2.5. Enterprise value is 2 billion right now. EBITDA 58 on that one, 58 million. And then EV to EBITDA ratio 35 on that one. Next here is cost to mine 1 Bitcoin. That includes, on average, what was their cost to mine Bitcoin? I believe that includes, let me see here. Cost of revenue. So that includes all the numbers down here. Let's go down to that. Take a look at it. Yeah. Cost of revenue, 45 million. So that's kind of what we're working with here. All the other things that are included in that. So their all-in cost was about 22,000 per Bitcoin on that one. If we take out depreciation in that one, we're down to 14.3 thousand. Okay. So definitely better there. But still not 22 is not bad. It's better than what it's been here. 37,000, 32,000. That's good. I want to keep that as low as possible as we can. Other than that, I see nothing else here that's kind of jumping up. Oh, one other thing here. And I'm doing this for all the miners going forward as they report their latest quarterly results. We'll look at miner analysis here. So I'm trying to figure out what the miners would be, basically, which miners could possibly be in trouble come halving event. So what we're doing here is looking where the Bitcoin price could be potentially. I mean, Bitcoin price right now is at 45,000. We're also looking to see where the network hash rate could be, which I have it at 605 exahash. And then we're just kind of looking to see what is their current average watts per their fleet, average joules per terahash. What is their reported cost of electricity right now that we could find? Some of the ones we could not find, we have them at 5 cents because they haven't reported. So hopefully they do report it. We'll get this updated. And then we're looking at the daily revenue, total revenue potentially for like a 30-day period. And then what is that going to be after the halving event for them as far as electrical cost, 30-day net profit margin for all these guys here. And then we're also going to take into account the latest quarterly results they provided. We're going to look at monthly operational average amount there. So what does it cost them to run the business basically? And that includes things like payroll, general administrative compensation, professional fees, things that are cash-based. Typically, we're going to look at that. Also, we're going to estimate net monthly income on that. Net monthly income, let's see. Oh, that's just those two being, so we're taking the profit that they could have had in the 30 days and subtracting the operational costs. And then we're going to get basically what they currently have. We're going to look at their current assets, which is going to be cash. And if they hodl BTC, it'll be in here as well. And then we're looking to see how many days of, or not days, how many months of runway do they have after the halving event if things go really bad and Bitcoin stays where it's at and or goes down a little bit here. But it's kind of like an estimate as far as how many days could they survive without having to either dilute, get loans, or get bought out. Okay, so based on the latest numbers that I do have here for Cleanspark, we're looking right now, based on what they have right now, being where they are right now with their hash rate and everything else, come the halving event, if it happened just right now, and we got to 605 exahash with the network hash rate as well, we're looking like they could have possibly 37 months of runway before they would have to either dilute, and this is with the cash. Obviously, they have some things that they have to pay upcoming that are part of their contracts with Bitmain, so that's going to obviously take an effect on it as well, but this is kind of just a normalized thing for all these guys here. We're not looking to future payments they have to make. We're just looking at what they currently have on hand and what they would look like. Okay. All right. So that is it. Other than that, Cleanspark has been doing well. Yes, they did miss their target here to get to 216 exahash by the end of the year, or at least by the end of 2023 is what their goal was. They did let us know ahead of time that that was not going to happen because the electrical provider was not going to be able to hook up their power lines to their facilities until sometime, like they said, in the first quarter of this year. So we got that. We got the power lines hooked up. Now we have them getting to 13 point some exahash, and they're going to get the other 1.4, 1.6 exahash installed in the next couple of weeks when they replace that transformer. So a little bit of a delay there. Still not that bad. So we didn't have to wait a full half year or year to get there and have miners sitting in there. We only had miners sitting in boxes for a couple months, which isn't too bad, right? Timing is not always going to be perfect. As best as you can try to time it, you're not always going to plan it out perfectly. But at least we didn't have like a year out, which we've seen with some miners. Okay. Other than that, them growing into the halving event, I think is great. Them getting to 20 exahash by the end of the first half of this year is going to be also great for them. Obviously, after the halving event, it's going to be, I mean, I think we should have this current quarter still really good because you got January, February, March in there, which is going to be Bitcoin mined at normal. And then come April, you're going to get the halving event, which is going to cut down the revenues quite a bit in half. And then, so it'd be Q3 for them. That might be a little bit painful on the balance side of things, number side of things for the quarterly results. But that's going to be the same thing for all the miners as well. Now, them trying to get to 32 exahash later on this year, by the end of this year, is going to be definitely a challenge for them. They are going to have to possibly buy out somebody that's struggling, buy out some facilities that are in trouble as well, and then grow that way. But basically, that's what they have to do here. But given that the track record that they do have here with over the last 3 years, basically, they started in 2021. So we got 2021, 2022, 23, 3 years. In the last 3 years, they basically grew from 0 exahash to having almost 13 exahash right now. So definitely substantial growth here compared to some of the other miners that we've seen in this space that have been around much longer and haven't been able to grow nearly as much as Cleanspark has. So based on Cleanspark's proven track record, I am very confident of good things to come potentially. And then we'll see how they continue going forward. But as long as they keep executing like they have been, I'm going to be a holder for this until, sometime later on next year when Bitcoin possibly peaks. Going down here, I forgot to mention to you guys on this. I usually mention it here. Based on my numbers here, this is the numbers. You guys can go back to other videos as far as probably the video from last week when I talked about them on their production update. You can probably see this number here. I had them at 73.7 million here and 12,000 roughly. They came in at 73,786,000. Okay, I was off by 0.10%. So really happy there. The closer I can get to these numbers, the better. And I've been pretty spot on with Cleanspark here. Some of the other miners are a little bit more tricky, especially if they have joint ventures, things like that. Cleanspark's pretty easy to do. They do a great job reporting, just like a lot of the miners as well do. But some of them have a little bit more trickier businesses where they, have other joint ventures and things like that, which makes it a little bit more tricky. And then trying to figure out what they're actually mining. So, but we try to do as best we can here, and I'm really happy with that. So I'll leave it at that. Like I said, Cleanspark to me has been a long journey. I've started buying them in 2022. This was basically when they were around $9 at that point, and I've just dollar cost averaged in for the last 2 years or so because I just didn't know where the bottom was going to be on Bitcoin and the miners. And I'm happy that I did that because I was able to basically follow them down, get a really good price on them, and then obviously appreciate the growth that followed afterwards. Okay. So that is it. I'm going to start rambling on here. I just want to say that the spreadsheets are going to be available to the Patreon members. Link to that is in the description bar, and that's still like $8. There might be a couple spots that are still open in the $5 tier or the $4 tier. You still get the same amount. I just had the tier set up to limit the amount of users that we get on there. I want to limit it to like 1,000 users in total because it's a lot to do these videos and then communicate with you guys here and then also communicate with everybody on Patreon. And so I wanted to limit it a little bit. So that's why the tiers have been going up in price. But as people jump out of those tiers, they become open and people are more than welcome to obviously jump in those tiers when they are available. But that is it. So you get access to all this. Also, the Discord channel is private to us as well. We have a bunch of great conversations in there as well. And I'll leave it at that for that one. So I do appreciate you guys watching. Just want to say thank you. I hope you guys enjoyed this video. If you did, hit the like button, subscribe. It helps me out tremendously. And we'll see you guys tomorrow. We'll see how tomorrow's going to end. But it should be a fun one. We'll see where Cleanspark ends up tomorrow. If it's going to end up actually being up to 20% or even more than that. So it might be fun. Good times. All right. I'm out of here. See you guys. Have a great night.